Good morning. It's Monday, August 22nd, 2022. Looking at the daily chart, regular trading hours in the E-mini S&P. Per the post-market video I did on Friday, I had expected, not expected. I said we'll see what happens, but it's likely we get continuation in the overnight coming into Monday, and that's exactly what's happened. We're trading right now at 41.8475 with a low of the day last week. It looks like around 42.20-ish. So it's quite a bit of a gap down we've got going on. If you look back here between the 9th and the 10th of August, I believe that's the dates here, we have a gap that has not been revisited yet. So we're trading right about here. Let me pull in a where my controls went. Just a moment. There we go. It's a little something to assist visually here. We've got a gap over here from the 9th to the 10th, and we're trading right here. Okay, so we had a low on Friday here. We're gapping down right now. Now it's about 10 after 7 a.m. Eastern time this morning, so it's very early. We got about 2.5 hours left until the open. So where we open, I mean, we could completely come back up before then. But I wanted to talk about it now, early today, because this is quite a significant gap as possible situations coming forward. So we are back into, this is 8 days back. This is 9 days back. Well, excuse me. This is, let's see, 1, 2, 3, 4, 5, 6, 7, 8 and 9 days back here, okay, is what we're looking as far as entering this range and possibly taking it back. Now, this red moving average is 20 periods, and it is a short-term trend up, passed through the purple 50 and the white 100, and this is a very visual destination that the market likes to come back to on almost any time frame, the 20 moving average. So we might see a move down and through it. It could be, depending on the volume and the if there's continued long liquidation through this gap. We want to consider the gap as more like single prints, and it could be very thin as far as volume. So we could see a rapid move through here and even down to the 100 possibly. Now that's quite a move. That would be quite a big down bar. Let's just take it one piece at a time, okay? We haven't even cleared this low yet back on the 10th. So let's look at the profile on this. I've already pulled it back to the 9th and the 10th. So this is the 9th in the regular trading hour session. By the way, this green line here is just this trend line right here that we've broken. We broke away from it. One scenario is that we come up here and touch that trend line, but so far away it would seem unusual for it to make that kind of a move today. But I do have it in the I do have it on deck as one way the bars might paint as we close this gap, and then how much further we go, who knows? Okay, so looking at the 9th and 10th, the one thing I want to point out right here is that we have a poor low. Okay, now this is what I call a too short poor low at the time, but maybe it's not so stuck right now. Okay, so we could see coming back through this. You can see that the overnight low is pretty weak here, right on that poor low. I can remove these red lines. They don't mean anything now. However, I do want to mark. I think I do. No, I don't have it marked. I do want to mark where this is because it's so far back, we won't be able to see it while we're in session. Make it solid. I'll make it a little thicker because I don't usually have this thick of lines on the chart. I'll know it's there. So let's move back over, look at the overnight trading. You can see we came quite a ways, right? Now, R through G is the pretty much the Asian session, and even though there are quite big swings, I'm calling this rotational, okay? And then we have it pretty much a down move with a new distribution, in the European session, which has resulted in rotational at the moment. Okay, so we've got again a double distribution in the overnight here, so that bodes well for continuation to the downside. And the low of the day was 42.2075. So let's just get right to it. We don't have a lot of news on deck. We've got an announcement at 8:30 that's not overly a market mover, and then we have some bill auctions at 11:30. Let me pull in the. It's a lot like Friday. Okay, so we're looking at gapping down over 10 points. So we're actually gapping down. Let me count this up. 42.2075. Right now we're trading at 86 half. So you're looking at like 30 some points, 35 point gap right now. Well, could go either way. That's quite a gap that might beg for some retracement, but there could be some momentum to the downside at this point. So we've got a gap down. Let's look for gap rules where we don't, and what that means is we aren't going to see much of an attempt to close the gap. It may try, it may get a few points or so. What I would look for is it to not get very much outside of, let's say, where this single print area is here. Now, ideally, you're looking at maybe just to open and a couple ticks and then come back through and a drive down. That would be the best for the gap and go situation. But given the nature of the ES and how it really has some big wide swings the last couple years, we could see, and this is quite a big gap, a move, and actually this overnight low here needs to be a lot lower. Yeah, these are not correct right now. Move the overnight value rate POC right here, VPOC. Okay, so it's possible, it may attempt to close the gap all the way up to where it's very thin in here, underneath this distribution. I'll just use the crosshairs. Maybe right underneath this distribution, and then comes back down through. Again, this is assuming this is 2.5 hours away. So 2 hours 15 minutes. If we open somewhere in here, okay, and we come back up, even all the way to the bottom of this distribution here, and then come back through the open, it'd be worth it to find a place to minimize your risk and be short, because there's a lot of potential to the downside yet. Okay. Another thing would be, if you want to be more conservative, is wait till we come through the overnight low, presuming this G low here will hold, and then get short against this area here, because you do have a pivot point here. It looks like an S3. I apologize for the viewing on your screen if the numbers are so small, but I changed the fonts to a lot smaller and did some other things that enables me to fit a lot more things on my screens. And I don't need to see to the tick the numbers. I really don't need to read all that. So let's look down here where the bottom, or where that poor low is that I was talking about. It's all the way down here, okay? So there's a gap in between where we are right now. Let me go back to that daily chart. We've got this, where we are right now, it's right in here, okay? We've got this big gap, okay? Now let's talk about that situation. So the idea would be to go with the gap. Now how far it goes, I don't know. You can look also at a gap as a, okay, I'm talking about two different gaps. The gap down this morning, presume we're going to open with a gap down, and the gap from back between 8.9 and 8.10 where it gapped up on 8.10. So that gap, you got to consider it more like single prints, like almost like a buying tail. So that's rejection. It rejected out of that area quickly. And, how far it gets into that, I don't know. It may have a hard time working through it. So if the opportunity is to gap and go, to go short with the downside and continuation, it's very important to watch for inflection points or where it seems to be finding buyers, and take your profits. There's a lot of room for wiggling around today, to the upside and to the downside. And then the other thing that could happen, of course, is that we close the gap. And I just left these from Friday because it was sort of the same situation. We were having a gap down, but in this case, again, this could start to close early, right? But that's an opportunity. There's like 35 points between here and the low of Friday for potential taking profits against the weaker hands in the overnight. So you want to look for a close of the gap. And in that case, just to be a little more specific, what I would look for here is an open and maybe having trouble getting outside of this value right here where there's a lot of volume. I say value, and where there's volume, there's value. Okay, so getting outside of this, of course, it could initially be a fake out, a drive down, take out the overnight low, come down anywhere from a tick to 4 points, and it come back in the overnight range. That might be a place to get long if you believe that's going to close the gap, but I would definitely want to be back above the actual open, maybe even the overnight VPOC. You want to see it start to build volume, and you want to see the market internals be either pulling off to the upside or positive, right? So on the other hand, just get a lot of chop. You could get what seems to be attempts to close the gap and attempts to go with the gap. So this might be when there's gaps, it first begs the invitation to trade early. But if it's you don't want to get chopped up and shoot all your bullets early either. So it might be better to wait till some structure develops and to get a good feel of what the market is trying to do and how well it's doing it. All right, so that would be the other option. So it's pretty straightforward. Go with the gap or close the gap, right? And how you get on board and if you like it, that's individual. All right, so the other thing is, and this has to do with closing that gap, re-entering the range 9 days back and close the prior gap between 8.9 and 8.10. I ought to put in here just striking the regular trading hours 20 moving average or the, hang on, let me see if I can pull this up real quick. I'm going to open another chart book here. Okay, just a moment. $41.68.75 is where it is on the where the 20 moving average is on the Globex. Okay, so that almost looks like a no-brainer that it might want to touch that. It rarely the market seems to like come that close to a 20 moving average and not attempt to kiss it. Okay, so that's something to bear in mind. Let's see, move back to the other chart book. All right, and again you can see it's quite a ways from the low of Friday, and it's not that far really. It's at 58. Well, I guess that's 30 points almost from where we're trading right now to this one. So anyway, on Friday we saw the market come one tick below the bottom of that range when I had suggested that one situation that could happen is that we re-enter the range from 5 days back. So we did that and developed value and volume, and the market internals were heavily negative, and we got there, right? It worked. As I had mentioned on Friday after market, I abandoned my plan. I completely just did the wrong thing. I just, I expected that to happen. When it was happening, I lost the plot, all right? So today, one very highly probable story is that we re-enter that range, that gap area, and it's 9 days back and close it. Okay, trade to the other side of that range. Now it is quite large. There is, this could be an area of support where this 20 moving average is, and it maybe not get very much through there, and not get all the way down here to the 100 and that kind of thing. So again, it's better, in my opinion, to, as we saw on Friday, we made an attempt to do this, and then it rocketed back up, almost took out I don't know if it almost, but it went quite a long ways. So if somebody had been short expecting that to happen, they had to sit there all day long and take a lot of heat, or at least give back a lot of ground that was gained And in my opinion, it's better to take chunks of it. If you get a move to the downside and it's starting to waver and wobble, then get out and re-enter. If you're trading a lot of contracts, you can afford to have one run after you've already built up some profits on the move. You've already capitalized on it. But if you're a onesie twosie person, there's no sense in having a one lot that goes your way 20 points, letting it come back against you 15 to hope that it's going to go another 5 points past that 20 mark. Take it out. And if it does come back, then re-enter on a retracement. It's really just that simple. All right, so those are the kind of like Friday. It's sort of the three situations that are seem highly probable, and I'll be back this afternoon. I do need to go to the auto mechanic this morning. I have an appointment, so I'm not sure what time I'll be back or how much I'll be able to participate at all, and may just be observing today. We'll see, because if I miss all the action early, I'm more of an early trading person, and if I miss all that, I sort of lose a lot of feel, but not entirely. So we'll see what happens. All right, make a great day, and I'll see you on the flip side.